So I'm here today with Renaud Laplanche, CEO of Lending Club. Renaud, what is Lending Club?
So Lending Club is a credit marketplace. So it's a two-sided marketplace with borrowers on one side who come and apply for a loan, and investors on the other side who provide the capital to fund the loans. So Lending Club facilitates loans, they underwrite, price, and service the loans.
So what is disruptive about Lending Club?
So when you think of the way credit has been provided so far, it's really been provided by banks. And the typical banking process is to collect deposits on one side and turn around and make loans and really transform short-term illiquid capital, short-term liquid capital into long-term illiquid loans. Lending Club really has created this direct flow of capital from investors to borrowers. And by doing so and by operating fully online, we are able to lower considerably the cost of operations of banking. So we have no branch network. We use technology to automate a number of processes that are manual at banks, and that really enables us to lower the cost of credit for consumers and make more financing available for small business owners.
Are banks friends or foes?
So we are transforming the banking industry, but we are transforming it with the banks. So we really believe that the banks can be part of the transformation. So we have a strategy to partner with banks. We've announced a number of partnerships with community banks across the country that are interested in innovation but don't necessarily have the resources to take on sort of large technology-enabled processes. So the ability for community banks to click into our platform and have access to a national origination platform is really attractive to them. We've also entered into partnerships with larger banks like Union Bank of California that we've announced last year, whereby the bank can make loans to their customers through the Lending Club platform and really take advantage of our low cost of operations to make loans more profitably than they would directly.
Lending Club recently had signed a partnership with Google. Talk a bit about what it is.
And so the Google partnership is a similar platform play as the Union Bank deal, in the sense that under this partnership, Google can make loans available to their partners. So we have a network of over 10,000 partners that can benefit from this type of loans. And the loans are funded by Google. So it's really a way for large corporations across America to extend credit to their customers and their partners, and this way really fuel the growth of their partner network, as well as earn more yield on their cash than what they would be earning at the bank.
Do an IPO when other companies like Uber and can actually raise money on the private markets?
Yeah, so we could also raise money on the private market, but more importantly, in our case, we didn't really need additional capital. So the company has been cash flow positive for several quarters now. So the primary benefit of the IPO for us is more of a brand building event and also a way to continue to signal to the market that we are planning to be a standalone entity that has to stay. And I think operating as a public company helps get that message across, but also helps enhance the credibility of the firm. I think when you provide a financial service, it's really important for your customers to know that you have a stable financial basis and that you're here to stay.
So talk a little bit about the process of going IPO. Your experience.
Right. So the process for us was actually probably a bit stricter than it would be for a lot of companies because we didn't benefit from the Jobs Act. So now companies can do this more sort of quiet, sort of testing the water type of exercise, and they don't have to make their initial filing public. It's something that wasn't available to us because we've been issuing notes publicly to investors for quite a while, and we had more than $1 billion of notes being issued. prior to the IPO process, so we didn't benefit from the Jobs Act. But I think for companies that can benefit from the Jobs Act, the IPO process is probably better now than it used to be, and more flexible. And again, the ability to sort of test the waters and understand what the public market investors are really thinking and how they would value the company, I think is a very helpful process for startups. I mean, what's next is a little bit of more of the same. We've barely scratched the surface of what we can do. I mean, we've been facilitating more than $1 billion of loans every quarter now for the last couple of quarters that we reported. But that's really a drop in the bucket in the scale of credit in the US. So I think our number one goal is to continue to be more relevant and more helpful to more people, which is essentially doing more of what we're currently doing. So that basically seize more share of the market. We've been sort of amazed by the appetite on both sides of the platform. So there are a lot of borrowers who are sort of really interested in reducing the cost of their credit and getting off credit cards and entering into a more responsible, lower cost product with Lending Club. And also on the investor side, there's a lot of appetite from both individual investors and also now institutional investors to continue to invest more on the Lending Club platform. So we have a pretty good sense of how we're going to grow the platform on both sides with the current product. At the same time, we're also planning to add new products, and we've started that process last year by launching 2 new products, a sort of small business financing product, as well as making an acquisition of Springstone that offers education and medical financing. And we're planning on continuing to launch new products over time.
International, can you replicate the Lending Club outside the US?
We think so. It's not an immediate priority, again, because of the size of the US market. So there's no rush.
How big is the US market?
So it's really trillions of dollars. I mean, there's sort of $2.3 trillion in consumer credit outside of mortgages. Then there's another $12 trillion in mortgages. And over time, we're planning on also offer sort of car loans, student loans, mortgages, so the entire suite of credit products.